Welcome to Inside Startup Investing, the only podcast where you can invest in every guest. On this episode, I will be speaking with the co-founder and CEO of Citizens Coffee, Justin Giuffrida. Justin is a returning guest, and for those who didn't listen to our first episode over a year ago, let me get you up to speed. Unbeknownst to me, coffee culture in Australia is huge. One could likely argue it's even more elevated than coffee culture in Europe, and is known for exceptional breakfast pastries and food alongside the coffee experience. So like any good Aussie, Justin and his team are bringing the breakfast experience to the United States. When I was recently in New York City, I stopped by their Soho location and was blown away by their service and the overnight coconut milk oats dish. What Justin and his team have built is an elevated Australian-inspired coffee chain that they now plan to scale across the country in the coming years. In the past year, they have made their first foray out of New York City into Texas, with 2 new locations now operating. While they have not scaled quite as quickly as I think we first thought they might, they are building a playbook that is both cost affordable to build new stores and able to begin generating profitability rather quickly. It's interesting. The coffee category is constantly evolving, and recently we have seen La Coulambe and Blue Bottle Coffee be acquired for enterprise values of $900 million and $735 million, respectively. Justin and his team, I think, are at an inflection point where they will start consistently rolling out new locations to build enough mass to become the next interesting elevated coffee brand acquisition target. And with per store sales nearly double that of Starbucks, with a lean build-out model cost structure and tenacious founders that have been through it all, I think it is safe to say this team has a bright future ahead of them. So with that, let's get on to the show and welcome Justin. Justin, thanks so much for joining us today.
Awesome. Hey, thanks so much for having me, Chris. Super pumped up to be back on the podcast with you.
Me too. It's really nice to see you again. I know it's been a bit since we last chatted, but I actually like when that's the case because it's an opportunity to dive in on all of the latest updates. So last time we chatted, it sounded like things were going really well. So I'm really interested to hear, not to make a pun here, but to hear what's brewing here in 2025 for Citizens Coffee.
Yeah, for sure. I like the pun entry there. So we've got a lot brewing, which is always the case at Citizens, but I think right now has become a really exciting time for the brand. Where we've now officially, I think the last time we chatted on the podcast, we had successfully entered the Texas market in Houston and had one of the best openings that we've ever had. Since then, we've actually now expanded and opened up a new market in Austin, Texas. That's been a record-breaking expansion for us. And what is so important for a young, expanding brand like Citizens is that you get to see, does the concept work, from city to city, market to market? And Austin, it turns out that Austin loves it better than any other city that we've launched into thus far. So that, alongside some of the CPG items today, I'd love to give you an update on. But it's a really exciting time, and we're getting a lot of attention, both on the restaurant front and on the investment front as well.
Well, last time we chatted, I know, big market for you is New York City. And you had some metrics that kind of suggested that, your stores kind of outperform on a per store sales basis that of a Starbucks. As you've gone on to expand into new markets like Texas, what are some of the challenges of growing into those markets? And do you have some metrics to reflect that you can achieve that same success in other cities?
Yeah, for sure. It's a great question. We get this question pretty often about, what does it look like porting the brand from New York City to, other markets that are maybe more representative of the larger base of America, because we know that New York City is a pretty unique market for a growing restaurant brand. So we did a lot of study around macro and micro factors of new markets, to understand, how do national brands perform in different markets around the country? Do they perform above their national average, or do they perform below, which is a really nice indicator of the power of certain economies as it relates to a restaurant brand. And alongside that, we also study, more micro factors like competition landscape, compliance, net migration patterns, So there's a lot that goes into this, Chris, about how do we select markets. And that's all the upfront research. Now, really what matters in the end is actually how does the brand perform once you open those doors. And, for us, we're a small team with big dreams. So we really bet everything on going to Texas because we knew if we made it in Texas, it would open up a huge door. Some of those cities are amongst the largest economies in this country. And, for us, when we opened Houston, the Houston market, it turned out to be the best, in terms of metrics and sales volumes, it turned out to be the best opening that we've ever done, beyond anything that we've opened in New York City, which is absolutely mind-blowing because, the volumes of New York, give you that sense that you're going to be doing higher sales in New York City than anywhere else. Well, in Houston, that really crushed that assumption, and we actually had the best opening that we've ever done. And then the same was said for Austin. We opened in Austin 10 weeks ago now, so we're super fresh. I'm actually sitting in front of a render of our Austin location, but just behind me. And the Austin location turned out to be substantially higher than even the Houston location. So, I think what's really encouraging for us as a young brand and for, people that are following and supporting Citizens is we work well in New York City, in urban tier 1 markets like New York, but we work just as good, if not better, in more tier 2 cities like Austin or Houston. So that's a huge amount of confidence for, the kind of interest that we're getting for investors and supporters of the brand. One more thing I'll just add to that before I kind of hand it back to you is part of the reason we chose a market like Texas is because we understood that the sales volumes are just as high whilst the cost structure of our business is substantially lower than doing business in like tier 1 markets. So we understood that if we could crack this Texas market, we're going to be able to scale whilst being much more, substantially more profitable on the way as well. And that's what it's turned out to be. Austin turned profitable within 6 weeks. If you look at some of the industry averages in the restaurant industry, that's like tremendously unique. And we are projecting for both Austin and Houston locations to be our most profitable locations moving forward. So it's a really, really exciting time for the Citizens brand.
A risk that I don't think enough people understand when you're in retail, especially in the still early days, right? You're not fully scaled up by any means. You're on that path. Is that each location you open is a risk to taking down the whole enterprise, right? Because it takes a lot of money to open new locations and to build them out, and you're not making money for the first 6 or 12 months of building them out and getting them ready. So talk to me about costs of opening a new location, how you have financed that, and how you plan to continue to finance, scale and growth going forward.
Yeah, it's a great question. I think partly what's made us successful to date is that we're very, very efficient with the capital that we've raised and both that we've compounded in profits at Citizens today. And when I say efficient, to open a new location at Citizens, it costs us $500,000, so $500,000 to open a new location. Now, by contrast, it costs around $1.9 million to open a Starbucks, $2.5 million to open a Shake Shack. So you can see, based on, a new CapEx benchmark for some publicly traded companies, we're opening our locations for far, far more efficient in terms of dollar spend. Now that comes down to we're a young startup business. We are much more agile than these companies. We've got an in-house, unfair advantage in one of our founders is an architect. So we're able to really move quickly, secure real estate, faster than publicly traded companies. We're able to build them for a lower CapEx dollar value. So that's an advantage for us as a startup business, and we're fully really taking that on our side. Now, another metric that's important for our business is what you call a payback period. And typically, best-in-class concepts in the food and beverage space have a 3-year payback period. That means within 3 years, you will pay back that $500,000 that it took you to open. And then as soon as you push past that inflection point, every dollar is pure profit that is going towards the growth of the company. Now, Citizens to date, we're at 24 months in a payback period. It takes some restaurant companies over a year to turn profitable. Well, our latest opening here in Austin, where I'm based out of right now, it took us 6 weeks to turn profitable in this location, which is, it's really remarkable. It's the best opening we've ever done. And I think that's a big confidence push from us, because as we're growing, we're only getting more efficient, more profitable. Our operating leverage, our experience, everything is really scaling with this brand. So directionally, we're really, really confident and happy.
Sometimes when you open the doors, no one comes through them. Entering this new market, you're an unknown, right? So what has been the key to getting people to know the brand and to come to the store? What's your marketing strategy?
Yeah, for sure. Well, I think, what you just mentioned is probably true was true for Citizens in the earlier days when no one knew us. But one thing that's cool about, watching the brand grow is watching the equity around the brand grow. We opened here in Austin, where it was our first location in this city, so you'd really make an assumption that no one knows you. Well, in actual fact, Citizens has got this really great growing brand recognition around New York City and Houston. Now, they're two cities that have the highest reciprocity to Austin. Think about a lot of the folks moving to Austin, they're coming from either New York or California. So one thing that I think Citizens is enjoying as the brand grows is that the equity around the brand is growing. And that's a really powerful tool, because that means that as we open more locations, in a certain respect, it gets easier. The brand is easier recognized. That means that our sales ramp in the first, 12 months is far more powerful than it's ever been before. So that's one piece. But to go back to what your question was around marketing. Now, one thing that we're proud of at Citizens is we've got a really great development around our systems and our processes about how we expand. First and foremost, we're a best-in-class restaurant company and we operate restaurants. But close behind that, we have to get best-in-class in how we open and launch restaurants, because our goal is to become a national restaurant brand. And so we've got a really great process and playbook around how we open our restaurants. And part of that is our marketing initiative. So we do what's called LRM, Local Restaurant Marketing. And what we call at Citizens is our Local Legends program. So when one of our restaurants opens, we team up with 3 local non-for-profits that are within our demographic and area. And then as our teams are being trained, we bring those non-for-profits into the opening process and say, hey guys, invite as many people as you can on your email list in your local area. And part of the testing and the pre-open, we're going to provide, all proceeds go back to your charity. So the charities, really get the full benefit of bringing in all their kind of stakeholders, all their followers, and it gives it's twofold for us. It gives our teams a chance to get a ton of reps in, all departments of the restaurant, and it also gives us a chance to really get exposure in marketing, in great PR and marketing to our local area, whilst giving back to the charities. What we see is that helps us completely. That's like a huge launch pad for the brand, because we come out of the gate well-trained, well-oiled in our teams, and we get a ton of notoriety and positive sentiment from our communities, because we're supporting and giving back to the community that we exist in. And and that's true for our launch, but it doesn't stop there. Local Legends is a part of our company where we give back a percentage of our revenues back to rotating non-for-profits, and that's a part of our powerful culture that's developing as well. So that's a little nanosecond about our marketing initiatives on launch.
Before we dive back into today's episode, I want to tell you about something exciting happening this month. Investment Crowdfunding Week is coming September 29th through October 2nd, and this is the event for anyone serious about startup investing. We're talking 4 days of deep dive sessions with industry leaders, platform CEOs, and seasoned investors who've been in the trenches. Whether you're just getting started with Reg CF investing or you're looking to level up your deal analysis skills, this virtual event has something for you. I'll be there, and I think you should be too. Head to the link in our show notes to register, and trust me, you don't want to miss this one. I know I look at this as kind of a progress update call to hear how things are going, but I think it's a good time to kind of dive in on, launching a coffee house. Actually, it's an interesting time, right, with a lot of news out there about Starbucks and their new CEO for the past year trying to implement strategies to get back to the basics and what Starbucks used to be rather than what it's become, which is more transactional in nature and less about being a coffee house. When you think about your differentiating factor in the market and why people come to you versus going to a Starbucks or anywhere else, what is that thing that makes Citizens unique?
It's a really awesome question, and I'm super excited to give you a couple of our differentiating factors. So the first thing that I'll pull back and say is, when I think about what we're seeing, on the macro about Starbucks, really, really about their performance and their, how the company's kind of performing in today's consumer environment, it's not a surprise to us. I think we're seeing experiential premium brands like Citizens now start to really take flight as the consumer trend is changing. And I'll talk a little bit about what makes Citizens special as opposed to Starbucks. But for the first thing I'd even love to ask you back, Chris, is have you ever heard about the Starbucks case study in Australia? Have you ever heard that?
No.
That piece? So this is interesting, and this is going to dovetail into the answer. But Starbucks entered the Australian market in the early 2000s, and they opened something like 81 locations within a couple of years. After 8 years, they closed all 81 locations down, and that's not because Australians don't love coffee. We love coffee just as much as any caffeine-fueled economy in this world, but it's because of the sheer standard and culture around Australian cafes, right? And Australian cafes, in essence, were already beyond where Starbucks was when they entered our market. And that's what we're now transporting, that magic, that experience, both in product, in experience, in hospitality. We're bringing that to the US market, and we're seeing huge success. We're seeing our sales are well above where Starbucks are on a per store basis. And why is that? What is that magic that I'm talking about? That magic is chef-driven food with a great supply chain. We don't use packet CPG like manufactured foods. We use fresh ingredients that are made fresh, well-sourced every day. And we see that our locals absolutely thrive on our breakfast. We see that we do food, as we are as specialty and craft in our food offering as we are in our coffee, and that's unique. Usually a business like Starbucks does coffee and then food's very much of an afterthought, or you have a breakfast restaurant that does food but they really don't pay attention to coffee and the quality behind it. What makes an Australian cafe really special is that they do these elements under one roof together, and we're a full service restaurant whilst being a full coffee shop and QSR to go as well. So both of those pillars are under one roof, which is super unique. And then we do all of our delivery programs on all the third party. We've got our native delivery program integrated. So, we focus on being, chef-driven food menus, great supply chain. We roast our coffee fresh. All of our coffee is third wave as well. So, we use the best technology, the best techniques. And we have baristas and teams that know you by face, name, and order. When I think we can all attest to going into a Starbucks today, it's a pretty transactional experience, while we're lifting the game in our food, in our coffee, in our guest experience as well. So we see that our locals, if you think about this, the concept that I'm describing, healthy food at a great price, deliciously house-roasted fresh coffee with teams that know you by name, face, and order. Well, that's a very sticky business, Like, we see our locals come back to us every day, sometimes multiple times in a day, and that guest frequency is what really propels us towards having some of the best volumes in this segment. And, the last thing I'll add to that, Chris, is breakfast and coffee is an incredibly fast-growing segment in the restaurant industry. It's the fastest growing segment, and it's also amongst the most profitable in the segment as well. When you think about the commodities of coffee, the gross margins you can take on those commodities, alongside commodities like bread, eggs, avocado, well, they're hugely profitable products, as opposed to some of the other corners of the restaurant industry as well. So it's a very exciting time.
No, I've certainly always found the Starbucks bakery to be fairly underwhelming, and the concept of having this very abundant bakery and breakfast offering,
Right.
that's compelling. I think it makes a lot of sense. Now, you have fairly ambitious plans of growing this business. It sounds like you've opened 2 stores in this new market. And I know last year when we were talking about entering the Texas market. So you've done that. And congrats
Right.
on that. When you think out 18, 24 months, what does success look like? Like, are we opening 2, 3 stores a year, or how do we accelerate that?
Yeah, for sure. It's a really good question. So where we're trying to go, where we're trying to get to, our roadmap is being built around getting to 40 locations in 5 years. Now that's a really high traction point to get to, and why we want to get there is because we think that's a great thesis for ourselves and our investors, that once you reach 40 locations, it starts to attract really substantial investors and potential acquirers of the brand, and that's where a great return can be had for ourselves and our shareholders. Now, how are we going to get to this 40 location mark? Well, we've got a roadmap built through the cities that we're in, plus a few new markets on the way, to really get to 40 locations. And Texas is not only is it a great economy to do business in, but it's got some of the biggest cities in the country. So Houston can house 15 locations of Citizens. Dallas can house another 12 to 15 locations. Austin is a little bit smaller but a fast growing market, so that's a 10 location market. So we're now going to ramp up our growth through these markets. This year we're actually doing 3 locations. So Austin was the first of the 3. We've got 2 more locations, one in Houston, another one in New York City coming. And the idea is to build the kind of scale and the pace through these cities. So this year's 3, next year it's 6. We need to ramp all the way to 10 locations a year as we get to 40 and beyond. And the best thing about the restaurant business and the coffee business is once you find your recipe and model and your markets, it starts to become very predictable. The cash flow, the kind of real estate that you need, the kind of buy box that you need, the infrastructure surrounding it, replicating and copy and pasting your concept once it's successful, as we've seen like brands like Sweetgreen, Carver, First Watch, it becomes quite predictable, and I don't think you can say that for a lot of businesses scaling. So, yes, the restaurant, and the coffee business can be tricky, but once you find your recipe and your scale, then it starts to become incredibly predictive, and if you stay disciplined within that, you can really achieve some tremendous results.
I think you're already hitting on some of it, but I've seen some exits in the not too distant past where the company on paper is doing well or appears to be doing well at face value, but as you dig in, they've taken on so much debt to expand, right, to create new locations or to manufacture the good or whatever it may be, that when the exit comes along, it's like, we require for $30 million and we had $28 million in debt. So it's actually $2 million to the equity holders. And now that's not such a great return. How do you think about managing debt to invest in building these locations? Yeah, what are you doing there to kind of protect investors?
Yeah, for sure. Look, I think first and foremost, we need to ride the balance of being, a really strong economic model. And, what's true for any high growth business is that we need to reinvest a lot of our profits and our investment dollars into the growth, but we have to do it whilst balancing the burn, and one thing that I'm super proud about today is that Citizens we're a cash flow positive and cash flowing business. And I think that's pretty rare. At restaurant level, we're incredibly profitable. The restaurants average over 21% EBITDA profitability at 4-wall, and at corporate level, we're compounding profits as well. So those propel us forward, and you want to work off that positive base. Now it's all about how do we then pour, a little bit of gasoline on the fire, right? How do we pick up that pace? And that's where, investment dollars will come in. And it's about balancing our debt to equity financing strategy. So debt's a non-dilutive and a very, very efficient financing for us. We're always going to be taking on little bits of debt and balancing that out with our profitability, and then raising rounds of equity along the way. So right now we're doing a $3 million round. We're more than 50% through that between our last round and what we're currently raising on WeFunder, where we've got a lot of attention from VC and private equity firms on us right now because the brand is now national. And so a lot of that proof of portability is proven out. So part of our cap strategy is to take, a pretty substantial $5 million check from a VC partner that will sit on the cap table alongside our crowd investors. So we're going to protect our crowd investors and bring them on the journey with us. We don't believe in removing, some of the investors off the cap table. A lot of our locals and fans that have supported us early on, we're going to bring them on the full journey, and then we're going to exit together in 5 years. Is the goal and the roadmap that we have in front of us.
Now, one of the other things you've talked about that I definitely want to get into is the CPG side and actually entering stores with your product and your brand. What does that look like today, and what are your ambitions on that front?
Yeah, for sure. It's a really good question. I get this question quite a bit, which is, what's the thought behind launching a CPG company when you're a growing retail restaurant coffee business? So the first thing to pay attention to today is, in my case studies of successful scaled brands that have really successful transactions in the market, they're not one thing to one market. They're a bit more dynamic than that. They're at the intersection of restaurant, retail, and CPG together. And why is that? Why do retail businesses get into CPG? It's because the consumer behavior today is that we like to buy from brands that we know, we trust, and we love. And so when I walk down the aisles of a Whole Foods or a Kroger, H-E-B, or name your regional grocery distribution, Citizens is one of the most beloved brunch and coffee brands in all the markets that it does business in. Our reviews and our guest sentiment is incredibly high. And so, people that have that kind of sentiment towards the brand are going to want to buy from the brand when they see it in the supermarket as well. So we have that level of authority and that love, within breakfast and coffee. So naturally, we're now going to start releasing products in that segment where when a customer walks down an aisle and they see, the Citizens brand amongst 15 other brands that they don't know that are just pure CPG companies, we really stand out. And so that's one of the biggest reasons that we're starting to launch our CPG division, which has got huge amount of potential. We're incredibly excited about it at Citizens. The second part is that it opens us up to a much wider segment of acquirers and strategic investors in 5 years. Instead of just being a restaurant or retail brand, we're now a CPG brand, which allows other huge CPG, matured businesses to really look at investing or acquiring the brand, because then they can really integrate their kind of business into it. And so what I've seen in some of the most recent powerful transactions is brands like Nestle or brands like Chobani acquiring younger upstarts like Citizens, because they understand the kind of unison of the customer, of the products. And so part of our thesis at Citizens is, don't just scale as a restaurant brand, scale as a CPG brand where you've got the authority and the love and the velocity, because then that's going to open you up to strategic acquirers and can fetch some of the best valuations when you're a dynamic brand like that. So, yeah, well, what's your thought on that, Chris? Is that something that, someone who's in the investment space, does that resonate with you as well?
It certainly does. I think the very simple answer is Starbucks and Peet's Coffee are two of the largest coffee brands on the coffee shelves of name your regional grocery store. So right. The reality is there's a tried and true playbook of these major brands doing exactly that. The question comes is, as kind of a younger upstart, how do you get on the right shelves near your brand, where you are, and have success, right? Because you could always get pulled off the shelves as well. And do you have enough brand awareness yet to have that success on the shelves? So I think that's the big question there.
Right.
But as long as you roll out in the right markets alongside your stores, I certainly see that as a very interesting path for sure.
Yeah, I love the way that you talk about localizing the strategy. It's not going to make a total amount of sense to go into unknown markets where we don't have that equity. What I described about Austin is, you can see that, wow, we went from, once a Citizens location fully matures, we have an average unit volume of about $3 million. So in Austin, because we have that reciprocity and brand equity, even though we don't have a single location here, it's already at, we're already at $2.5 million within 10 weeks. So we're starting to see the equity and how it affects the business. And we need to really think about that level of brand equity in a localized way when we start to launch this product business and scale it alongside the restaurant. So it's going to take some strategy and thought and some hard work, but we believe it will pay off in the end, in the exit.
So over the next couple of years, if we think about number of stores opened in total that you have in your footprint, amount going through kind of the CPG segment, like from a revenue perspective, store revenue, CPG revenue, where does that get you projection-wise in the next couple of years?
Yeah, that's a great question. So we modeling out what our average unit volumes are today, we see that we can, once we hit our 40 location mark, we'll be well beyond $120 million. And we have projected out to get beyond $150 million with the CPG channel plugging in. So our core business is always going to be our locations because they're high sales volumes and high profitability, and we're going to drive that. But the CPG business, we're committed to investing in and scaling with it. And we have projected out, trying to record over $20 million in CPG after 5 years it's a realistic target that we can work towards. As we know about CPG, once you hit that velocity, it becomes really powerful. It's about how do you build the velocity along the way. And we believe with the brand scaling, we can achieve that in CPG too. So that's a little bit about our revenue marks. Some of the transactions that we see once you get to that $150 million mark or $100 million mark with locations beyond 30 or 40, there's some really great transactions out there in our space. Brands like Blue Bottle, brands like La Colombe that have been acquired for, some pretty powerful multiples once you hit those levels of traction. So we're super excited. We're really in a really exciting momentum building stage. We're going from $5 million AUV to now on a run rate of 12.5 million this year. Expecting that to get to closer to about 18 to 20 million by the end of this year once we launch our next 2 locations. And we just see that building further and further towards that goal of 40 locations and of 150 million. I would love to communicate to an investor that, we're a brand that's experiencing some really great proof of concept. The brand now works across 3 major markets in the US. We've got a really clear pathway to the 40 location and $150 million mark. We know where we're going, we know how we're going to get there, and we know where we want to land once we arrive at that final inflection point. This is a management team that's been together for the whole journey, and we're really, putting our own belief in our own stock in this journey as well. So, it's a game of trust, it's a game of belief. We've got a great brand reputation, great leadership reputation, and we really strongly believe that we're well on our way to hitting that goal.
If you like what you heard on the show today, you can check out why Citizens Coffee received a 4.1 out of 5 on our proprietary rating scale at kingscrowd.com. You can also invest on WeFunder until January 16th, 2025. And as always, if you liked what you heard on the show today, please like, subscribe, and share our podcast wherever you listen so more investors like you can find us. Thanks for tuning in and happy investing.